What's going on, everybody? It's Kevon here, right? And today, what we're here to talk about is what is Forex, right? So a lot of people been seeing my posts, my charts, things like that, and just been asking me like, "Yo, what is Forex, bro? Like, what are these charts? What are you doing?" So today, that's what we're gonna do. We're gonna take a breakdown. We're gonna make it super quick, super simple. I'm about to end this. Hopefully, you'll be able to tell somebody else what Forex is, right? So, boom. What is Forex? So to start, Forex is short for foreign exchange, right? Or foreign exchange market. And what the foreign exchange market is a global financial marketplace that allows you to exchange currencies, right? So when you go to different countries, and let's just say you're from the United States, when you go over to Europe, you'll need to exchange your US dollars for euros, right? So how you do this is through the currency exchange, right, process. And typically you find them in airports and different locations around the city. But what that is an oversize of the foreign exchange market, right? So with these currencies though, or trading within the foreign exchange market, you can't really trade just the value of like one currency, right? So what you do or how it's traded is these currencies are matched up in pairs, right? Or exchange rate pairs, currency pairs, exchange rate pairs. And what these pairs equal is an exchange rate value, right? Um, so what that is telling you is, hey, for example, let's look at Euro USD, right? So you have the Euro, you have USD. So what this is saying right here is this is giving you the value of how much 1 euro is worth in US currency, right? So 1 euro is worth $1.11 or 1.115 cents in US currency, right? Um, and there we have it. So also another little fun fact is compared to the New York Stock Exchange, which trades at about 22 billion dollars a day in trading volume. The foreign exchange market trades at $6.6 trillion a day in trading volume. And when you really think about it, and think about the whole thing that goes into this market, it makes sense when different companies want to buy into or buy products from other countries or companies in other countries. They have to exchange that currency first for the currency of that country or whoever is selling that product. You also have banks that trade in here, retail funds, hedge funds. So when you think of the amount of people, the amount of dollars that trade through this, it's a remarkable market space to be in, right? So in some parts of the world, the foreign exchange market is open 24 hours a day. Unfortunately, if you live here in the United States, like I do, that's not really a thing for us. So foreign exchange market opens up at 5 p.m. on Eastern time, Sunday, and closes at 4 p.m. Eastern time on Friday, right? And with the foreign exchange market, you have the ability to really trade uh 24 hours, honestly. And that is because I say that because with most brokers, you're able to trade cryptocurrencies that never close. So that leaves you a 24-hour day rotation. You can trade your currency pairs and things like that Monday, Sunday through Friday, and then on the weekend you're hopping on cryptos, right? So let's just give a little foreign exchange market example, right? So let's say you travel to Italy, and in the airport you realize now that you're in Italy, your US dollars aren't going to get you a lot of places, right? So you say to yourself, hey, I need to exchange this out for the currency of this country, right? You think euros. So you look around, you see a big old kiosk in the airport, right? It says currency exchange. You walk over, you're like, hey, I need to exchange my US dollars for some euros. So they reply back the exchange rate is 0.90, right? So what this is saying is your US dollar exchanges for 0.90 euros, right? So just a little bit short of a full unit of currency there. So you exchange $500, you get back 448 euros in return, and you go about your merry little way. After your trip, you return back to the United States, right? You're getting off the airport, you realize like, hey, I still got some of these euros left, right? You check it out, you count it out, it's 224 euros. So about half the amount you came with, or at least you exchanged when you did it. So you find the nearest currency exchange at hand, you go over, you're like, hey, I need to exchange these euros for US currency, right? So they give you back about $264. So count it out, you think the math's a bit off, right? So you try to hand back that extra $10 that they gave you, right? And they say, no, we don't want it, right? And then you say, why? They say the exchange rate has changed since you left. And that is how we make money, right? In a sense, is we're trading this exchange rate value, let's just say at a certain low point, right? With the speculation due to our market analysis on riding that wave up. So that's in very simple terms, very, very simple terms for Forex trading. So what are we trading? So in simplest form, we're trading money, or specifically different national currencies, the value of that money specifically. So you got to think of buying a currency in a country like buying a share in a company, right? So the only key difference here a little bit is that you're also able to sell, but you know, we're not going to get into that because you can sell with options. But with these, right, let's just say you think this company is going to do good, right? You think they're going to continue to improve. They're going to continue to increase sales, increase revenue, things like that. So you think the valuation or the value of this company is going to increase, causing their share price to increase in value, right? Getting money. It's the same speculation or the same type of mindset that we have when we're trading currency pairs, right? So let's take a look at this. We're looking at USD CAD, for example. What we're saying is we're betting that the US economy is going to grow better. It's going to grow stronger. That currency is going to grow tougher. It's going to continue to rise, right? So with this increase in value in that currency, once we get let's just say we bought in USD, right? Our speculation was correct. USD, the chart continues to go up. Now all we're doing is really selling those shares back to the market. But for us, it's really just swiping over, clicking close trade. Like, you know, broker does all that back end. We just boop, boop, close trade. So in general, the exchange rate of a currency versus other currencies is a reflection of the condition of the country's economy compared to other economies, right? So if you have USD, let's just say, take our example of USD CAD, right? US dollar versus the Canadian dollar. So if you look at this chart and you see the US, this chart just going up and up and up and up and up. One thing you might be able to infer from this is that either the US economy is doing really well, right? US economy is either doing really well or the Canadian economy is doing really bad right now, right? So that kind of, if that makes it simpler to think of when you're looking at these charts or things like that, or just understanding this. Yeah. So in general, right, try to remain focused on the fact that it's two currencies versus each other. And the number that we're seeing, right, at the end or by these currency pairs is going to be your exchange rate, right, which is telling you how much one US dollar is worth in Canadian dollars, right? So to break it all down, so in simple, what we're doing is trading this exchange rate pair, right, which looks something like Euro/USD equals 1.1156, right, or $1.11. So this exchange rate, and again in value, it will cost to exchange $1 in currency for another. So we're going to take our example of Euro USD again and just say, hey, 1 euro is worth $1.01 in USD currency. Right. So these currencies are traded through a Forex broker, right? Similar to how you trade stocks. Like, before you can just trade in stocks, you have to first get a broker. That could be like TD Ameritrade. Why can I not think of any? Robinhood's technically one, Webull technically one, like things like that. Things that are allowing you to get a broker to be able to allow you to get where you need to be in position to trade in these financial markets, right? Um, so with these forex brokers, these currencies are always paired up and quoted in relation to another currency, right? So a few examples of those would be Euro USD, which is the euro versus the US dollar, Great Britain pound or the British pound versus Japanese yen, US dollar versus Canadian dollar, USD CAD, and GU, which is just the British pound versus US dollar. I am really a big fan of GU and GJ. Here in, of course, you're in the academy, you'll hear me talk about that a lot of GJ, GU trades. Just, personal preference. So once again, when you're trading in the Forex market, what this allows you to do is you can not only buy currency pairs or buy into a currency, you can also sell a currency. So let's just say you think the euro is going to be weaker than the US dollar, right? Then all you're simply doing is you're going to the chart, you're making your speculation based off your market analysis, your trading plan, different confluences that make you want to enter this trade. Once you have that, you're pressing sell. Boom. That's really it. Like you're pressing sell. Now you're in the trade. So just to keep putting it all together, right? So we know that what we're trading is the foreign exchange market. What this market is allows us to trade different currencies against one another, or trading different currencies in general. These currencies are going to be quoted in pairs, right? We're not buying or selling just a specific US dollar, the euro. No, we're buying, euro over the US dollar or US dollar over the euro. So these pairs are assigned the value of how much it will cost for one currency in terms of conversion of another currency, right? So if you're looking at a pair like Euro USD, what this is saying is the euro is worth X amount of dollars in USD currency, right? And that's what we're trading essentially. We're trading the value of this exchange rate and the difference in price. So price tends to fluctuate a lot. So what we're able to do in this Forex market is we're able to, let's just say, get in the market at this exchange rate at a low rate, buy into this product or this country, ride this trade up and be able to capitalize on that rise of exchange rate, right? So let's just take a quick look into the charts really quick, right? Show you a quick example of what it is that we're doing, right? So this is what a chart will look like in very layman's terms, right? This is GU, which is the British pound for the US dollar. And we'll get into the understandings of these candlesticks more, but every candlestick you see represents 1 day of trading currently. So as you progress through the course, you'll see, I know this can probably like look intimidating, but we keep it super, super simple, like I promise you. So just, you'll start to get a deeper understanding, and I didn't want you to learn about what the Forex market is and not see at least what it even looks like. What does these charts look like, right? So they can look like this, they can be a line chart, different things like that. And as you progress through the course, you'll learn different things like support and resistance zones, chart patterns like this overall, bearish channel, this bullish channel, different things like that, understanding different things like double tops, double bottoms, inverted head and shoulders. So with that, those of you who are in the Discord channel, go ahead and go to the presentation or go ahead and review this video again and go ahead and take that quiz. And honestly, that's all we we got today. So hopefully with that, you were able to take away everything you needed. Before we end, actually, I do want to go over this. So a few terms and definitions here. So exchange rate, again, is the value of one currency for the purpose of the conversion to another. Foreign exchange market is going to be your global financial market that allows one to trade or exchange national currencies. Forex is short for foreign exchange, right? That's all it is. It's short for foreign exchange or foreign exchange market. The exchange rate pairs is the price quote of pair of the one currency versus another, right? So what is the difference in changing those over? And currency exchange is simply the action of exchanging one currency for another, right? So with that, I bid you all farewell and a happy day.